of this last leg of fall is 49,519, and we've taken that out today with some gusto. So again, I mean, very good news. Of course, mid caps and small caps. So that's the other one. Big moves, 2.5%. Look at the micro cap index, for example, and look at just sectors which are doing well, right? I mean, the defense as a space is back, and there are two repeats from yesterday. Capital market index is up strongly, and the real estate index is up about 3% as well. So high beta kind of sectors once again starting to participate. Always a good time if you're trying to see and gauge the texture of the market overall. So, holding steady and building on gains. Surbhi.
Absolutely. And, once again, India is almost outperforming most of the global markets. Asian markets for sure. Most Asian markets have had a flat to slightly negative close, but we are doing so much better. European markets are actually looking very, very good. The German market is leading from the front, 1% higher on the German DAX. And for what it's worth, those US futures, they're showing some green at least right now ahead of the big Fed meet announcement after yesterday's slam dunk on Wall Street. We're charting our own course. I mean, it's no longer about what's happening with US. At least for now, there's a big repair and recovery wave that seems to be underway. Just a quick mention on some stocks, even large caps, because large caps are doing so well. Financials are leading this rally from the front. It's no longer just banks. Diversified financials also doing very, very well. The bank Nifty, of course, is up about 1%. But look at some of the other names. Shriram Finance, HDFC Life, SBI Life. Life insurance is a red-hot space because of all the deal activity. And anyway, NBFCs, most of them, including Shriram Finance, told us earlier this week that liquidity conditions are easing. Spells good news for perhaps margins as well. So that's a very, very solid part of the market. And metal stocks have managed to retain most of their gains thanks to the safeguard duty announcement that has come through. So, for instance, Tata Steel, 2.5% on the higher side. But the bigger metal gainers are actually non-ferrous stocks. Check out Hindustan Zinc. Let's see if it's still retaining that move. Stocks like Hindustan Zinc, Midhani, these were actually getting even more excited than the ferrous names. And the afternoon trade really has come in the defense stocks, industrials, defense, a lot of them PSUs, looking very, very good. Mazgaon Dock, 10%, Cochin Shipyard, 8-9%, Garden Reach Shipbuilders, 20%, some very, very heavy-duty buying and interest back in these stocks. Even RITES, for that matter, on the railway side, RITES is up almost 9-10% as we speak. So big buying in some of these old favorites, should I say. Well, let's look at the trading strategies for the last hour. Mitesh is with us. Mitesh, good to have you. Do tell us about the Nifty. What's the approach you're taking, individual stocks? And just throw in a word on these defense names. I mean, there's serious momentum suddenly. Not sure if it's just a flash in the pan or whether the charts indicate something more.
So I think, Sudhmi, on the indices maintaining positive bias, the bank Nifty has hit the target of 49,800. We got a high of 49,807. That's a couple of weekly averages of place, so you might see might stop over here. But I think we are looking at 50,200 and in a good case scenario, 50,600 to 800 zone. So we are positive, but I think, tactically taken some profits off and, shifted the call strikes on the upside. And that's the way we are approaching. On the Nifty as well, I think, the Nifty have maintained that we will get to about 23,100, 150 zone. And beyond that, even 23,500 is possible. So maintaining positive bias on both the indices. Just that during the trading time, you need to keep shifting your positions. On the defense names, I'm not tracking all of them, but Mazgaon Dock and Garden Shipbuilders have come onto my radar. I think Mazgaon Dock, big breakout has taken place over there. I think the stock moving above 24.50 was a very positive, and I think this could suggest that the stock will most likely target 28.40, 28.50, which is the highest ever weekly closing which the stock has done. Similarly, Garden Reach also, there's a big breakout above the weekly averages. I think the first pivot is around 17.55 here, so that's the near-term target, and then we could even look at 18.20, 18.30 on the upside. So very positive on both these names.
Okay, so defense stocks definitely are making the cut for Mitesh. Got it, Mitesh. Thanks very much. We'll come back and get some more ideas and ask you some more questions. But for the time being, let's welcome in Siddharth Khemka of Motilal Oswal Financial Services. Siddharth, good to have you on. Let's actually get straight away to the big issue, this big mid-cap resurgence. Is this the real deal, or would you still advise caution? I mean, look at the way some of these PSU stocks are rallying this afternoon.
Yeah, hi, good afternoon, Surabhi. So I think there are multiple factors here at play, and the single biggest factor that we believe is a lot of mutual funds sitting on cash and the March year end coming up. So I think they are deploying some of this cash, and you will find value in some of these mid caps after the fall. So a lot of these companies have seen a valuation derating rather than a lot of companies where we had seen a premium valuation earlier, and that derating led to the sharp fall in stock prices. So some of these names or some of these sub-segments where earnings growth continue to be pretty steady, that is where we are seeing a recovery. Yes, high beta is making a comeback, but we do remember that Q4 earnings season will start by mid of April, or we can say by 8th-10th of April, and that would be another quarter of mid-single digit earnings growth. So that could again limit the upside. But nonetheless, I think value buying is definitely happening at lower levels, and we definitely are suggesting selectively pockets where we find value as well as strong earnings momentum. Those are the pockets where we are trying to focus in this market.
Okay, some names. Give us some specific ideas.
Sure. So if you look at consumption is a big thing that we like for this year, and some of the names within that. You have the summer coming up, so a lot of summer related stocks are up. So consumer durables is something that we are liking. Voltas, Amber, and Blue Star, these are the stocks that could do well because of the strong demand. We are already hearing the shortages in terms of the compressors and the price hikes that they are taking. The other side to benefit from this high summer, high temperature is some of the food and beverage companies. So Varun Beverages is another stock that we believe could do well in this coming summer. And then from a broader consumption theme, something like an LT Foods, which is in the basmati rice. Recently, the government has removed the export ban on the non-basmati rice. There is a significant rise in demand, and LT Foods within the small cap space, that looks good. The other segment that we are finding good growth opportunity is the NBFCs within the broader financial. So RBI is not only increasing the liquidity, they have also loosened the regulatory grip on some of these pockets. For example, they have reduced the risk weightage for retail lending. That is a space which we again believe with the improving consumption trend during the year, that should do well. So along with the interest rate cut plus the increased liquidity, the cost of funds for NBFCs have come down. So stocks like a Shriram Finance, a Bajaj Finance are something that one can look at from a strong earnings perspective.
Okay, got it. So AC stocks, rice, and NBFCs. So those are some of the ideas. Siddharth, hold on. We'll have some more questions for you in just a bit. Let's put the spotlight on the one sector that's actually underperforming today. Why just today? It's the biggest underperformer of the year so far, and I'm talking about the IT space. Let's pull up the stocks first. Tech Mahindra, Infosys, TCS, all of them down and out. Even some of the mid-cap IT plays are weak. They're off the morning lows, but nonetheless, there's weakness in the overall IT space. Citi today came out with a note, and Citi is sounding quite cautious on the IT outlook. Let's go across to Hormaz to find out why. Hormaz, what is Citi saying?
Not very good from Citi when it comes to their outlook on the IT sector, and they believe that despite the IT index being technically in a bear market because it's down almost 20% or over 20% from its peak that it made in December last year, it still finds the valuations of the Nifty IT expensive despite this 16% drop year to date that you have seen, and of course the over 20% drop that you have seen from the peak last December. And despite this correction, the valuation premium that the Nifty IT has in comparison to the Nifty is still at 30%, and the 10-year average, the historical average, is at 12%. So it still finds that to be on the expensive side despite the growth prospects for the country improving. Now, the Citi has highlighted multiple points which can act as potential headwinds for the IT sector. It believes that this global macro uncertainty that has emerged, this macro data that has emerged from the US recently, it points to the fact that the near-term outlook for the US market, which turns out to be a core market for most of these IT companies, is not very good. And the disruptions that you are seeing in the AI space, competition from the global capability centers, all of these will act as potential headwinds for the IT stocks. And as a result of which, it is only expecting a 4% revenue growth for its coverage universe in FY26, which is the same figure that it is penciling for FY25 as well. So no significant growth on a year-on-year basis is what Citi is expecting. And they also say that improving margins in an environment like this is going to be very difficult for these companies because of the competitive intensity, and this despite the rupee depreciating to record lows, which is generally a positive for the Indian IT companies. Now, based on this, they have a neutral recommendation on stocks like Infosys, HCL Tech. They have upgraded emphasis to neutral after the sell-off that we have seen in the stock, and they also have a sell recommendation on a lot of these mid-cap IT names like Tata Technologies, Coforge, Persistent Systems, and a lot of the large-cap IT names as well, say the likes of Tech Mahindra, Wipro, TCS. So overall, a cautious note coming in from Citi on the Indian IT companies. It does not look good, at least for the near term, is what they say.
No, absolutely. Hormuz, thank you very much for that. That's an important sector, very important for the market, large cap wise. And we'll continue to sort of track this one as it kind of works its way through all the uncertainty, of course, not just with regards to immigration policy in the US, but of course technology disruption, especially on the artificial intelligence side. Every day there's a new headline. I mean, the index is down about 1% at this point in time. Actually, with regards to IT, the recent news flow on the back of which there was a bit of nervousness earlier in the week as well was, of course, news that the global banking giant Citi is going to, insource some of the employees, some of the jobs. I mean, essentially, he's going to hire employees directly and take away the work it kind of gives out to contractors. Now, this next conversation is a special one and a CNBC-TV18 exclusive. This is Jane Fraser, the Citigroup CEO, speaking with my colleague Lata on, of course, this entire debate about insourcing and whether work from to outsourcing players will reduce from here on, the Citi's expansion plans here in India, and of course, a bit about artificial intelligence as well. Take a look.
What is certainly true is AI is changing the potential for how we think about all of the work that's going on. I think you've seen that we have rolled out AI tools to over 140,000 employees around the company and around the world. And that is starting to change how we do work. It's starting to change workflows. It's unleashing a lot of creativity. And therefore, we're looking at insourcing more of the work that we do. And our technology colleagues are proving that they are more than up to many challenges. So we're bringing more of the activity within Citi.
Okay. Well, I'm going to ask you something specific. If those decisions are made, one company whose stock went down was LTIMindtree. They are big IT contractors for Citi. I would assume that even big companies like TCS and Wipro have done projects, at least in the past, for Citi. Are any of these names likely to lose work or lose the quantum of work?
Oh, I love our partners here in India. We have some fantastic partners who are strategic relationships for us. I don't see those strategic relationships diminishing in their importance in any way. The nature of work for everybody is changing. And I'm looking forward to seeing many of our key partners while I'm here on the ground.
Again, smart money guys who come on CNBC-TV18 often. Some of them are speaking about US exceptionalism ending. I mean, this is a more short-term phenomenon, only about financial markets. Would you agree?
I think it's too early to say that. The world is definitely becoming more multipolar, and I think we're watching governments around the world react to the need to adjust their macro policies to new geopolitical realities. In the States, we have seen almost all roads leading to the US for a while. And it's push and pull factors. You've got tremendous innovation amongst entrepreneurs in different sectors. You've got companies worldwide going to the US for funding. You've got wealth moving there.
Yes.
You've also got an ability to exit. There's strong governance. So all of these make the US extremely attractive, and I think are reasons why a call for the end of US exceptionalism is a tad premature. I think in the long run, the strength of the US and the importance it plays will be a critical pillar of the global economy and certainly of the global financial markets. It will be good to see financial markets developing elsewhere. But this does not happen overnight, and we need to see more development, as we're seeing in India, breadth and depth of capital markets, independence of institutions, good rule of law, all the things that investors want so that they can invest.
GCCs, the global captive centers that have come to India. There's a bit of a fear that if there is a big evolution of AI, this migration of work to India may not come with the same speed. What may be the Citi experience? I think you all have a GCC here in Chennai, right?
We have one of our most important ones globally. We're in about 6 different cities here in India, have been for longer than I have been at the firm, of having critical capabilities. And those have really evolved and changed in the 20 years that I have been at the bank, from being more back office support into now we have some of our most leading edge critical capabilities that are being developed here in data, in AI. India is central to our firm's transformation. So just never underestimate the evolution that occurs. There are going to be entirely new jobs and new industries created by these technologies. Here will be a center.
Sorry.
Yeah.
My anxiety is that GCCs have been an important dollar earner for us, foreign exchange earner. Is that trend in danger from a Citi point of view, and more generally? Do you think?
I don't think the GCCs are going to be in danger as long as they continue to adapt and evolve. The benefit of this country is it has an extraordinary cadre of highly technical, hardworking, and also creative individuals. That, to my mind, is where the competitive advantage lies, and that should give the country and everybody confidence that while it may change and evolve, that this will remain a core competency and India will remain a very critical destination. I am expecting to put more global roles here than I am in other centres because of that factor. It's the talent. I keep coming back to the people. It's the talent.
It's the talent that makes India what it is, and GCCs perhaps are here to stay. They're not going anywhere. Jane Fraser, the big boss, a lady boss at Citigroup. That entire interview plays out at 5:30 p.m. You wouldn't want to miss that. All right, with that, let's turn our attention to some of the immediate stories here and now. Hero MotoCorp is in focus. Sources have been telling us that the company has been hit by a spate of resignations of key personnel. Senior officials have resigned, and this includes Sameer Pandey, the HR head for talent management, Reema Jain, who is the chief information and digital officer, and also the member of the executive management team. There are other resignations as well. This would include the head of HR and culture and the head of business at Vida. We have reached out to Hero MotoCorp and a formal reply is awaited. Okay, so that's just an update on Hero MotoCorp. Siddharth Khemka still with us. Siddharth, I have to ask you about this intense rally in some of the shipbuilder names. Mazagon Dock, Garden Reach. We all know that they were pummeled. I mean, the stocks are off 50-60% from their peak. Would you be a buyer?
Surbi, I think, again, going back to the thought that some of these defense companies, the core business continues to remain strong. We have not seen any deterioration in the earnings, the quarterly earnings so far. And order book continue to remain strong. What also aided is that the government in the last few weeks have increased the order outflows to meet the year-end targets, and that has also helped the sentiments. So I think some of the companies within the defense names, for example, Bharat Electronics, which is a preferred pick, followed by HAL and Mazagon Dock. So these three stocks is where we believe that the earnings growth could be in excess of 30%. Valuations are comfortable. Some of the other shipbuilding names are very high beta names, and we don't have coverage. But I think the sentiments are turning in favor, at least for some of these beaten down stocks, which had fallen even before we had seen the market fall. So some of the money that people are seeing rotation and wanting to get into these strong names, defense could be a key beneficiary of that sector rotation.
All right, Sid, we'll take a quick commercial break. Thank you very much for joining us. Quick and shorter conversation today, but look forward to our next one. Here is some good news as we take that quick commercial break here. India's business news leaders now a click away, introducing the all-new CNBC-TV18 app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store. Just scan the QR code on your screen now.
Welcome back. Lots of news coming through this afternoon. And this is something that our colleague Ashmit is just picking up. It's important for telecom companies, and this could be a possible setback for telecom players, Vodafone Idea, as well as Bharti Airtel. Sources are indicating to us that an AGR waiver, that's adjusted gross revenue waiver, may not be on the cards anymore. Let's go over to Ashmit. Ashmit, what are you picking up?
Well, this could come as a big setback as far as Airtel and Vodafone Idea are concerned. Bear in mind that there was a proposal that had been floated by the Department of Telecom, the DOT. As per that proposal, what the government had been seeking, what the DOT had been seeking, was a 50% waiver as far as the interest component is concerned, and a 100% waiver of the penalty as well as the interest on penalty component. Now, this is something that was under consideration, that was also, in fact, shared with the Finance Ministry. It went up all the way to the Cabinet Secretariat. However, what highly placed sources within the government tell us is that this is no longer in consideration. This will not be proceeded with. This will not go forward. This, in fact, has been communicated by the Cabinet Secretariat to the Department of Telecom, and we're learning from highly placed officials that that is the status quo now. It will not be proceeded with. This, mind you, was the last leg of relief that had been sought by the telecom companies that had been impacted by the AGR judgment. Bear in mind that on repeated occasions, despite concerns having been raised before the highest court of the country, that there could be arithmetic errors, there could be computational errors, the Supreme Court has not seen it fit to alter that demand, that original demand that went against these telecom companies in any shape or form, no alteration coming in. The last leg of relief that was hoped is that the government, keeping in mind the stress that this brought about in the sector, could consider some relief. However, the decision, we understand, has been taken internally within the government, communicated from the Cabinet Secretariat to the Department of Telecom, that no further consideration is required, will be taken forward as far as the AGR relief is concerned. So setback coming in for telecom companies, particularly Airtel as well as Vodafone Idea, who stand to get impacted with this decision. Back to you.
And Indus Tower as well, it's an important story in that sense, because the general expectation was, expectations with regards to relief on this had been delayed and hopes had dimmed quite a bit. But those who still tracking this were, the general feeling was that eventually the government will come around and they will do something to lower the burden of this AGR. And it may happen, and lots of speculation, although that had also dimmed with the sort of market correction taking over. But I think this is now going to bring into sharp focus. I think the good thing is stocks have already corrected quite a bit. Indus, etc., are completely bummed out from where they were when this chatter was at its peak. Look at Voda, look at Indus. Maybe Bharti, of course, is an exception, but definitely for those who were hoping for some relief after the court said no, hoping for relief from the government, I think this is important in that sense coming through.
These companies, Bharti and Voda, I think they'd sort of tried a last attempt by filing another review petition in the Supreme Court. And I think in February, the Supreme Court had basically completely dismissed all those petitions, saying there's no case for any miscalculation in the total of that AGR dues. So the court had anyway struck it down, and now it seems from what Ashmit is picking up, the government is not also willing to relent on this. So the sums are large. I think it was almost, if I remember correctly, 40,000 crores for Bharti Airtel, far more for Voda as well. Now, if there's no relief on at least even a part of the interest or penalty, like what Ashmit is reporting, these are big sums we're talking of.
Yeah, and I think the reason why markets were expecting that the government will step in with some relief is because the government put in money in Vodafone Idea.
They're shareholders in Vodafone Idea.
That is primarily the reason. And of course, the last round which happened, a lot of sort of large institutional investors had put in money as well, right? So that is the reason primarily why the sense was that maybe the government will step in with something, a helping hand of sorts. But apparently no. Ashmit, thank you very much for that. We have Rupen Rajguru with us, Head of Equity Investments and Strategy at Julius Baer. Rupen, good to have you with us here. I don't know if this has been, if you've thought about this, the AGR issue and how that kind of impacts earnings for the liabilities actually for these companies. And as Ashmit, our colleague, is saying that apparently the government is also going to say no, is saying no.
Okay, hi, afternoon, Prashant. I think, as you said, it's an evolving story and we have to read through the entire matter in detail. But if you look through, from a listed company's perspective, the second largest listed company, from their perspective, their balance sheet, even if this decision were to be averse, I don't see any significant impact in their overall operations per se. And the overall story in telecom has been the hike in tariffs, which is coming through and which is getting reflected in higher ARPUs for them. And they probably are throwing more than 30,000 crores cash, free cash at this moment. So it should not be an issue there. The issue would be to the other smaller player, in which, as you also rightly pointed out, government in a way is an interested party because they are investor there. So while this relief is not there, whether there is any other moratorium or anything, that time will only say. But per se, from an impact perspective, the large listed player, directly listed player, has no major impact because of this.
Okay, we'll try and just, get some more perspective on this in a bit as well. Because Vodafone Idea was very clear that they had to look at some sort of, further capital infusion, debt infusion that is. raise that debt capital, and then hopefully, pay out the dues. Now, if there's no relief whatsoever on AGR, we need to see how those calculations will play out. The stock has come off. Of course, it was up almost 7-8% in line with the whole mid-cap surge. But now, just about, that's Vodafone Idea, just about 3% higher now. So we'll get you more analysis on this in just a bit. But Rupen, let's also talk about the overall market. I mean, I think everyone's wondering, we've had a couple of good days. Last week was all about consolidation, and this week is about, starting to build on some of those gains. Do you think the worst is behind us?
Yeah, hi, afternoon, Surbi. Isn't it market all about, sentiments and liquidity in the short term, and the daily movements in the market do impact our behavior as well. But if you step back and look through, and specifically if you see, what has changed in last 1 month, purely from a market perspective, the US market has seen a significant corrections, and there are reasons we all know about. Probably, I think market is fearing worst, which is recession coming through there. And since US had got significant amount of the share of the global liquidity, in last 4 years, almost 80% of the liquidity into the equity markets went into the US markets. And I think bulk of that liquidity went into the technologies names. So there was this huge skew. So now if the tide is turning there, I think that liquidity can find a place into other markets, and hence sentiment all over. And if you look through, all the international markets are doing pretty well. In fact, in last 1 month, the differential between the returns of US vis-a-vis international equities was as high as 14%. So the point here is that sentiment-wise, things at least, that adverse liquidity, and from an Indian market, as yet we haven't seen the FPI coming through. But if this kind of sentiment behaves, prevails, we might see it coming back. So net in the near term, a little bit of change we have seen, and we have to definitely look through on the fundamental side. So one of the key reason why we saw correction in the Indian market was higher valuations and lower earnings. So I think the Q4 earnings one has to closely watch out for, because if there is disappointment out there, so some of the action which we are seeing currently, to some extent, I would call it a relief rally, that might fizzle out as the results even comes through.
Okay, all right. It's getting hot, right? And all the sectors and stocks, which there are lots of them, which typically start to run ahead of a summer season, a hot summer season. And power is one of those sectors. Vivek is standing by with some data, some analysis. I mean, around this time we start talking about deficits and, the peak load and what is the shortfall, et cetera, et cetera. Vivek, tell us.
Well, absolutely right. Like you mentioned, demand for the appliances that you're going to use to cool yourself down is going to generate quite a lot of power demand, and that is what analysts have been penciling in, and that is what has actually led to a rally as far as the entire power sector is concerned. And now, when you're talking about the generation as well as demand trends for both February as well as the initial days of March, that is what it's indicating. When you're talking about February 2025 power demand, it was up almost 6% on a year-on-year basis, also taking into account the fact that last year you had 29 days in February, so it's the adjusted number. March generation so far has actually gone up almost 9% on a year-on-year basis. YTD demand in FY25 is up 4%, and analysts are anticipating that the year should end with a power demand growth of close to 4.5%, which comes in as a bit of a relief, given the fact that analysts were worried that this year around, on the back of unseasonal rains, you would actually see power demand plateauing. However, almost a 4.5% kind of power demand growth is what the street is now penciling in. A couple of research reports have come in on the power sector. Jeffrey says that the power demand generally picks up in summertime on the back of soaring temperatures. The demand should be the key driver for stocks in the near term, apart from the fact that they are constructive on the sector over the medium term as well. You did mention that worries about coal stocks, but this time around, coal stocks are quite comfortable as far as most of the thermal power plant pit heads are concerned. JSW and NTPC are the top picks as far as Jefferies is concerned. Axis Capital says March 2025 electricity consumption so far is quite strong, up almost 6.6%. They are constructive on the entire power stocks. And when you're talking about power demand in 2025, it's up 6.1% on a year-on-year basis.
All right, Vivek, thank you very much for that. That is power, and we'll get Rupen to weigh in on this one. But Balaji Subramanian is with us, Vice President at IIFL Securities. Balaji, you must have seen the news. I mean, it's a no from the government as well with regards to some relief on AGR dues after the court said no. This is, of course, all source-based so far. Our colleague Ashmit from Delhi has been reporting. What do you make of it? Was any how much of a relief was built in?
Hi, good afternoon. Thanks for having me on the show. I don't think people were explicitly building in any relief. This was more of a hope, especially because there were media articles that said that the government was looking at providing some relief on the AGR burden. And that could have been almost 70-80%. I'm just citing from media reports, as in we don't have any, explicit release that mentions anything anywhere. And the important thing to note here is that after the Supreme Court rejected the curative petition and review petition of the telcos on the AGR burden relief, the government went ahead and provided the waiver on bank guarantee. This was especially because the banks were reluctant to lend to Vodafone Idea, and there were a couple of things which the banks wanted to get more comfortable. One was the bank guarantee waiver, and the other one was the relief on the AGR dues. Now the thing is, with the AGR relief, probably not coming through, at least in the near future, going by what today's development has been. It looks like the debt raising process of Vodafone Idea might see further delays. So that means that that uncertainty persists, and that might weigh on Vodafone Idea stock, and to some extent it will also impact Indus, because one of the reasons why Indus has underperformed is because of the delay in fundraising of Vodafone Idea. The rollout from Vodafone Idea, we would have gotten more clarity had there been a positive development on these aspects, but now I think we'll have to wait for longer.
Balaji, absolutely. So some numbers will help, and tell us the ones that you remember top of your head. There were some estimates that the total AGR dues to Voda Idea could be as much as 80,000 crores. Just revise our memory on that. And then the options now. For a moment, if we work with the current scenario, that means there's absolutely no relief, not on the interest component, not on the penalty or nothing. Then what are the options? Because after the FPO, the debt raise was the next big thing. How much money would they have to raise? I mean, what really happens? I mean, Vodafone Idea's ability to continue as a going concern.
So I still don't see any risks to their ability as a going concern, because there is provision for the government to convert the dues into equity once the moratorium is lifted. So I think one possibility is that with the increased burden now, because once the moratorium is lifted, they will have to pay close to 16,500 crores every year on AGR dues, and if you add the spectrum payments as well, it goes as high as 40 to 43,000 crores from FY27 onwards. So, in light of these, significant payouts scheduled, and the cash flow generation being insufficient to make these payments, I wouldn't rule out most of these dues getting converted into equity at some point in time. Whether they get converted over a period of time, at what rate it gets converted, so these are all unknowns. But my sense is that over a period of time, the government stake in the company will keep going up as and when the payments become due and these dues get converted into equity.
That's interesting. So you're basically saying the government will have no option, because clearly, but how will Vodafone Idea cough up over 16,000 crores every year? So basically, the government's only option is just converted to equity. That's quite interesting. Any hopes of any further capital infusion? The Birlas infused, I think, a little over 2,000 crores last year. Any other form of capital, debt, equity? Do you see anything coming?
At least we don't have any visibility on that, because now Vodafone PLC is completely out of Indus, and whatever they got after paying their own dues, that money has been infused into Vodafone Idea. So I don't see any meaningful equity infusion, at least, because we are talking about very large numbers here, not like 2,000-3,000 crores. We are talking about 16,500 crores every year just on the AGR front. I am not even including the spectrum payments here.
Right, got that. We'll leave it there, Balaji. Thank you very much. We'll pick this up later when we have more on this story. But for now, it looks like it is no from the government as far as AGR relief. And I think the point about nobody was explicitly building in relief, but there was general hope that something will be done. The government will do something in this regard. Stocks come off. I mean, I think we were up about 8% on Vodafone Idea. We've got about 5% gains coming through now.
But I also kind of understand now why it hasn't crashed per se, because A, maybe it was not built in, and B, like Balaji is saying, the street probably feels that at some point this will just become a Government of India,
correct,
mostly a Government of India sort of an entity.
Correct, absolutely. Rupen is still with us. Rupen, just before we went back to the Vodafone story, Vivek was telling us about power and just your thoughts on that space and anything you like there.
Prashant, the power entire value chain between, say, 2022 and 2024 had seen a significant re-rating, starting from the utilities, both on the generation as well as on the T&D side, as well as the financiers and all other players in the value chain. So at this juncture, our liking is towards the T&D space. So within T&D, we like the utility on the T&D side, as well as a lot of other players which are suppliers. So which can be players who have presence on the HVDC side, some of the other equipment side. So we like that space simply because the kind of generations which we are doing, ultimately T&D is a critical element in the entire value chain, and there are few players which has very good order visibility and very good overall revenue visibility for next few years, and are post correction are now trading at a reasonable valuation. So that is the space which we like.
All right, Rupen, we'll leave it there. Thank you very much for joining us with that perspective today. Appreciate it. Well, time for our segment D Street Chatter. Nimesh is here with what he's picking up in terms of the overall market picture. Strong momentum in broader markets, Nimesh.
Oh, absolutely, Prashant. So,
yeah,
absolutely, Prashant. So, very strong then, and more so from a broader market point of view. The mid-cap index is up 2%. The bread is quite strong, and a lot of individual names are buzzing into it, especially the bombed-out stocks in the broader market. They have seen a sharp recovery today. In fact, in the last couple of days, the stocks are up 10, 15, 20% in the last 2 days. So clearly, there is momentum back in the broader market stocks today. However, from an institutional point of view, the flow seems still quite mixed. Yesterday was the first day of both FIs and DIs turning net buyers. In fact, this was a feedback last week from the Citi team as well. That the selling intensity has clearly slowed down towards India from the larger FIs. So that momentum of big selling is clearly behind, at least in the near term. So that's from a flow perspective. From a sector point of view, the sector which is doing good today is PSUs, and there is an institutional flow as well. So well bid by large institutions. The PSE index is up 2%. A lot of PSU stocks are being well bid by large institutions. In the F&O, there is a lot of short covering happening in the momentum names today, whether it's real estate stocks or the platform companies. All are seeing a rally, but that's largely short covering and not big buying. So you have to just keep that into account. Technically, 28,800 is what we've taken out of. So there is a possibility of a further short squeeze on the Nifty and on the Bank Nifty. That's the overall feedback. But largely, it looks like the fact that we are above some technical levels, the momentum in broader markets can continue, at least in the very near term.
Okay, absolutely. And what momentum we've had. Fantastic day, Nimesh. What about individual stocks and names? What's on your radar?
So the first stock in my list survey is Paytm. Big move on that stock in the last couple of days. The buying has actually resumed on that name as well. In fact, a couple of days back, there was an indication that a leading long-only fund was an aggressive buyer, and looks like that momentum of buying continues in Paytm even at these levels. So that's the first stock. The second stock is Macrotech Developers. While the real estate stocks have seen a pullback, Macrotech stands out. In 2 days, the stock is up 9% and on good volumes as well. Looks like some institutional interest is back. and there is a bit of momentum as well in stocks like Macrotech. So that's the second stock. The third name is L&T Mindtree. Well, the entire IT stock is down. The L&T Mindtree stands out because of selling pressure. There is long only selling happening in L&T for the last couple of days, and so is the case today as well. And the last name is Walchan Nagar. This is interesting. If you look at the chart, the stock is corrected massively. First signs of a bit of uptick today. The stock is locked at 5% up a second, but Y2D the stock is on still 45%. And I understand a leading family office who was holding a stock have finally sold out at the rock bottom price, and after that you've seen a bit of an uptick today. So Walchan Nagar is buzzing because it looks like the selling from that family office is largely over.
Interesting list as always, Nimesh. And anything you're picking up on defense specifically? Cochin, Mazgaon, Garden Reach, these three shipbuilders actually more than anything else.
Prashant, as I said, there is a bit of buying interest back in the PSU basket, but for the shipbuilders and defense companies, it's more of a hope trade that maybe towards the year end, you might see the closure of some defense orders for these companies. That seems to be the only buzz that I can think of.
All right, fair enough. Thank you very much, Nimesh, for that. We'll take a break. As always, we get you some short-term trading ideas. So that's coming up in just a bit.
Welcome back. The market at the Nifty level still about 66 odd points higher, 22,901. Let's get some final advice from Mitesh before the day closes out. Mitesh, so what's the sense? Advice on the index? What would you do? Any BTST? I don't know if there's STBT, but maybe BTST calls?
I go with BTST calls. The idea is that the market still looks good to me while we've tapered off a little bit because the bank Nifty also hit 49,800. So maybe, a couple of hours of volatility can happen. Some mild pullback can happen. The gains could be given up a little bit. But with the markets moving up, the AMC companies have given breakouts on the charts, hourly to hourly charts. So HDFC AMC is a BTST with a stop at 3954 for targets of 4030. Similarly, UK AMC as well looks good. That's the BTST as well. Keep a stop just below levels of 976 for target of 1010.
Okay, all right. Thanks very much, Mitesh, for that. So those are some trades coming through. The shipbuilders are at the bottom of the screen, the big moves that we have on our hands. Amrish Baliga is with us with what he'd want you to do and what his view is as far as markets right now are concerned. Amrish, thanks very much for joining us. Good to have you here. Hindustan Zinc is your pick for the day. 63-64% owned by Vedanta.
Right.
And of course, no further, as far as we know, no further plans from Vedanta to sell more stake. Go on.
Yeah, but then if you look at the business, it's India's largest and only integrated producer of zinc, lead, and silver. And EBITDA has been stable at about 51%. They've achieved the lowest cost of production in the last 4 years, which is about $1,041 per metric ton. And silver segment, in fact, contributes around 40% of the overall profitability. And this quarter, they would have surely benefited from the rupee depreciation as well as the bullish trend in silver. And from an ESG and net zero commitment perspective, renewable power is about 70% of the total power requirement. And in a sort of a diversification, they should be commissioning a 510,000 ton fertilizer plant in Q3. And this should add another 450-500 crores to the EBITDA. And if you see, it's been a great dividend yield stock, paid out about 110,000 crores of dividend in the last about 10 years. I'm expecting an EPS of about 31 for FY27, and with this, I have a price target of about 620, which is decently, higher than where we are right now. And this works out to an EBITDA of about, EV by EBITDA of about 11x.
Okay, interesting. Thanks very much for that, Amrish. Coming back to you with more questions. But for now, we'll have to take a quick commercial break here. There's 9 minutes to go for market closing. Stay tuned. Coming back.
All right, just about 4 minutes to go before the day closes out. Amrish is still with us. Let's just get some final closing thoughts. Amrish, we were talking about some of these recent listings and they got pummeled quite badly. I mean, I'm talking about MobiKwik as an example when the shareholder lock-ins opened. And the other is the IGI, the diamond certification company. So these stocks have really been thrown around quite hard. On MobiKwik specifically, would you have a view or advice? The stock's recovered also very well so far this week.
Well, that's true, but I don't really have much of a view on MobiKwik. Whereas IGI, I think at these levels, it makes sense. I mean, we have seen a 50%, I think slightly more than 50% cut from the top which we saw for the stock. And I mean, with this sort of a correction and looking at the niche area, where they operate, I think at these levels, it makes sense buying.
Any other PSUs? Today is a great PSU day, Amrish. Look at it. I mean, Hutco, Aircon, RVNL, all the old stars, RailTel, of course, the shipbuilders, all of them are back. But, people would be sort of a little cautious. Any pick?
No, that's true. I mean, one needs to be cautious at this point of time because we have seen an extremely good sort of a move in PSUs. And after that, we have seen this correction. But still, I would say they are, extremely cheap at these levels. But out of those, I would still go with possibly something like a BHEL at this point of time. And the other one would be Coal India.
Okay, all right. That's a call on Coal India. Just give us a couple of minutes, Amrish. We'll recap the day as well and start closing down, winding down. It's been a good, solid day. That's sort of the big headline coming in. India, definitely the best performing market in Asia. And Europe, of course, has been doing a little better than us. But nonetheless, I mean, it's a big, broad green slate that we've got. The market being led by financial stocks, financials and banks. Look at the Bank Nifty. The gain is almost 0.8% higher. So as we are getting into the final stretch, let's talk about the Nifty winners. On the Nifty, again, it's financials charging ahead. Shriram Finance, HDFC Life, SBI Life. These are stocks that are up and about. And throw in some of the banks like IndusInd Bank, 1.5% up. SBI, 1% higher as well. HDFC Bank has contributed. So you can see it's a wide sway in terms of financial stocks. Beyond that, of course, the newsmakers were from the steel space with the safeguard duty coming in. Tata Steel, 2.5% up. The other stocks that have done well include BEL, L&T. There's also BPCL. We've been talking about, of course, some of the industrials and PSUs, NTPC, all of them having a good day. On the large cap screen, the only weak spot really was IT. Tech Mahindra down 2.5%. TCS is down about 1.5%. Infosys, HCL Tech also losing a little over 1%. And some weakness in some of the consumer names, HUL, Titan, Britannia. These are stocks, even Nestle for that matter. So consumer and IT weak, financials charging ahead. But of course, a much bigger move in mid-caps, Prashant. I mean, and so far, so good. Third day of the week, mid-caps have come back in a big way. Yeah, no, absolutely. And very large moves in a variety of names, right? Shipbuilders, as we've been discussing, Mazgaon, Garden Reach, Cochin Shipbuilders. The bombed out names, Idea Forge, Fusion, KNR Construction, and continuity in gains in MobiKwik, HBL looking very good, GR Infrastructure up strongly. And many of these names are coming up on your screen as we are talking about them. What else? Techno Electric is another name. Rights, there's Mishra Dhatu, that is Medhani, which was up strongly. Swaraj Engines, big gains. The Indraprastha Medical stock was up once again. Talbros are just a sampling of names, and of course all these have got decent sized volumes as well. The list is longer, but this is the bulk of the big volume led gains that you had as far as this Wednesday is concerned. So a pretty good session all told, the outperformance is what I think stands out. It kind of course, I mean the fall was not 4% like with the 4% fall in Nasdaq last Monday, and we ended higher that day. This, of course, we sort of woke up to almost a 2% cut in the Nasdaq, and the market ends almost